Welcome back. The Securities and Exchange Commission on a mission to make it easier for companies to go public in America and easier to grow. I spoke with SEC Chairman Paul Atkins at the New York Stock Exchange to get a status check. What is your stance right now in terms of how to generate more excitement for initial public offerings and get companies to go public more often?
So I'm talking about how to make IPOs great again, and to make it cool to be, to have an IPO. I think that's kind of fallen out of favor for a lot of reasons. But today we have half the number of public companies as we had 30 years ago. And so that happens because, you have bankruptcies and mergers and acquisitions and all of that. We have a big, robust private marketplace now for private credit and private equity. And so it's comfortable to set out and get capital to develop your products, and there's a lot of eager investors in the private markets, institutions and individuals and whatnot. So that's kind of taken over from the old-fashioned way. So now you can stay private longer, and so in many cases going from private to public now is a way to cash out the initial investors, the VCs, the venture capitalists, private equity investors, and that sort of thing. So what we have to do is focus on, what is inhibiting people from becoming public. And I think there are three main things. One is just the cost and the weight of the overall framework for disclosure and for complying with SEC rules in particular. And so I think we have allowed our rule book to expand, but what should a reasonable investor need to know to decide essentially whether or not to buy, sell, or hold, as investment? And so that's what we have to get back to, and I think we've strayed over the years too much from that, and Congress has been to blame on some cases, and the SEC as well. But we have to right-size our rule book. We can't apply the same one-size-fits-all to small companies as to companies 100 times their size. So that's part of it. Litigation, and then finally weaponization of corporate governance around annual shareholder meetings and what is proper and not to go before shareholders.
On disclosure, disclose this, disclose that. It's just too much disclosure.
Exactly. Over the last, I would say, at least 20 years, as I have talked as a government official, but then also, when I was on, in the private sector, the thing I would hear from CEOs and from even institutional professional investors is, especially from the investors' side, is please, please, please do something about the amount of disclosure that's coming out, the weight of this disclosure, and especially if you have a lot of companies to look at and compare, it's really overwhelming.
So are you going through all of those disclosures right now to identify the ones that are unnecessary?
Well, so we will have a process, and so again, we were unfortunately stymied a bit by this long shutdown, and then now we have the holidays and whatnot. The federal government now is enabling us to bring on special employees, special government employees for a particular short term, and to devote them to particular tasks.
When will you have that list?
Well, we'll be working on that in the new year, and we're starting now with respect to planning and executing. This is going to be a big project management issue, to say the least. We started here a few months ago, after I became a chairman, to have a roundtable discussing executive compensation, which is one that we get complaints about all the time. It's even engendered this kind of consulting class that focuses on this one particular type of disclosure that's just grown over the years to be very complicated and technical, with options, pricing, and all sorts of things that companies have gone into over the years, engendered partly by SEC rules that have encouraged companies to go more into options rather than other types of compensation. So we need to focus anew on that to try to make sure that, it is comprehensible to investors.
The executive compensation is one issue that comes up with the proxy firms. And so I want to ask you about that as well, because you're also taking a look at that as part of the 3 items that you're focused on.
Right. Well, that's part of the, the issues around corporate governance and annual general shareholder meetings. So we need to look at those conflicts of interest, and I think some of the weaponization of shareholder proposals, for example, by let's just say shareholders who have their own agenda. I kind of call them politicized shareholder activists, and so they, so that is one aspect that we need to look at, and especially then with these shareholder proxy advisory firms, a lot of that has been engendered by some of the rules that the SEC has.
What specific changes are you looking for?
Well, let's say that with the weaponization of shareholder proposals, it's largely been around advisory proposals that come up. So we call them precatory proposals, not part of any rule or anything else. And I think it's been subject to abuse over the years, and it's extremely costly. It's burdensome on our staff. And now, especially after the shutdown, we have about 1,000 or more registration statements that have backed up that badly need to, those are like priority 1 versus, advising a company whether or not, what the staff's view of some precatory proposal is that has no real effect.
And on litigation, I guess lawyers go where the money is, and the money is in a public company. I mean, how will you change the litigious society that we've seen when it comes to public companies?
There are things like mandatory arbitration, for certain types of for lawsuits, and for fee shifting, which is loser pays basically. That's being suggested and tried by obviously countries outside of the United States, but that's allowed by some states and newly forbidden by some others. But that we have a federalist system, and let the various states decide what they want to do. There are avenues. Now, of course, the SEC is not really the one to have a lot of say in how or states want to deal with frivolous litigation, because we still need to protect meritorious claims of shareholders.
More of my interview with Paul Atkins at 8:30 a.m. this morning. Stay with us. We've got a lot coming up. Back in a minute. You're watching Mornings with Maria, live on Fox Business.